Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing from Kontoor Brands, and let me tell you, it's not just about jeans. It's about threads of revenue, stitched up strategies, and the occasional snag in the market. We'll decode their latest financial results and see if this clothing company is truly a good fit for investors. Are they wearing success or are their pants on fire? Let's find out. The report is dated February 25, 2025, so it's pretty current. It's called a current report, or Form 8K, which companies use to announce important events to investors. First off, Kontoor Brands, based in Greensboro, North Carolina, isn't exactly a household name like some of its rivals, but they're the folks behind iconic denim brands Wrangler and Lee. You might recognize them from your closet. They spun off from VF Corporation a few years back, so they have a relatively short history as an independent, publicly traded company. They're traded on the New York Stock Exchange under the ticker symbol KTB. This part is where they release their earnings. Earnings are how much money the company made. Everyone cares about the financial results, so let's dive into the money. The report reveals Kontoor Brands' financial performance for the fourth quarter and the full year of 2024. This gives investors an idea of how well the company has been doing recently. The official announcement of these numbers comes in the form of a press release, and it's all part of the show for publicly traded companies like Kontoor Brands. The press release is designed to put their best foot forward. It highlights the positive while downplaying the negative. We, on the other hand, will try to see through that. The report was signed by Joseph A. Alcaire, the Executive Vice President and Chief Financial Officer. He is basically in charge of the company's money. Okay, now that we know what this report is about and who signed it off, let's get into the meat of the financials. I'm going to need to pull up the actual press release to find the data. Scroll to Exhibit 99.1. Let's scroll to the exhibit, which should include the press release. Scroll through press release looking for key financials. Okay, let's find their financial numbers for the end of the year. Here we go, let's zoom into the numbers. Okay, for the full year, their revenue decreased 7% compared to the prior year. That's a pretty significant drop and a red flag right off the bat. Revenue is the lifeblood of any business. However, it's not all bad news. Their gross margin increased to 47.7%. Gross margin is a key profitability metric that shows how much money a company makes on its products or services after deducting the direct costs of production. In this case, it means they are making more profit off of each jean they sell. Finally, their full-year earnings per share, or EPS, was $3.93. EPS is a crucial metric because it represents the portion of a company's profit allocated to each outstanding share of common stock. It's a simple way to gauge profitability on a per-share basis, which investors care about. So, in summary, revenues are down, but they are getting more profit out of each item they sell, and their earnings per share are looking good. Let's try and see the reasoning behind this situation in their own words. Let's try and see what their explanation is. Here it is. They mention that they continue to strategically invest in initiatives to drive brand awareness and accelerate digital growth, which makes sense since they are facing revenue headwinds. Let's see what their 2025 outlook is. This is their forecast, basically. For 2025, they expect revenue to decline another 3 to 5%. The company appears to be in a turnaround mode. Let's see how they plan to spend their money. They plan to spend $80 million on buying back their own shares. This is a way to return value to shareholders and increase the share price. Okay, so after reviewing the company's recent financial results and future guidance, here's my take. Kontoor Brands is facing a challenging market environment, which is reflected in their declining revenue. Their strategic investments seem aimed at boosting brand awareness and expanding their digital presence, which is crucial for long-term growth in a competitive market. The increase in gross margin is a positive sign. It shows that they are becoming more efficient. Their plans to buy back shares could also help boost investor confidence. However, the expected revenue decline in 2025 is a major headwind. It suggests that their turnaround efforts have not yet fully taken hold. Overall, Kontoor Brands seems to be navigating a tough market with a mix of strategic initiatives and financial maneuvering. But it's not a slam dunk. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, be sure to hit that like button, drop a comment below, and subscribe for more financial deep dives.